My name is Bill Hughes. I'm with Consensys Software. I've been in the crypto industry for almost 5 years now. I'm a Vanderbilt alum, undergrad. Don't ask me how long ago that was. I'll give you a hint. The football team, basketball team, and baseball team was not very good, and that's being just very as delicate as I can be. I would like to welcome everyone here, Chair Hill, Chair Seelig, other distinguished members of our industry and government. I'd also like to thank everybody who was attending via live stream, including my son, who's home for Easter Monday. William, good morning. I told my wife, he's 4. You sure he's going to watch a live stream? But I trust. He seemed excited about it, so he's certainly a future senator, and maybe if he works hard enough, he'll be able to get into Vanderbilt. Senator Hagerty is a twice Vandy guy, both undergraduate, A&S like I was, and then law school. He was a 30th ambassador to Japan during the first Trump administration. He's been senator from Tennessee since 2021. He is on the Appropriations Committee. He is on the Banking Committee, chairs the National Security Subcommittee of the Banking Committee, and he is also on the Foreign Relations Committee. He actually took the seat of Lamar Alexander, another Vandy alum, and he and I were both president of our fraternity here on campus. Another connection. He was an economic advisor to H.W. Bush in private equity, and during the teens, commissioner of the Tennessee Department of Economic and Community Development. So in terms of seeing how digital assets are going to grow into the economy and change finance, I think you can see it from all perspectives. And today we'll get into a little bit about how DC is viewing these issues, especially from the legislative process. So I will jump right in, and feel free, of course, to give your welcomes as you answer this first question. I want to start off with the Genius Act. First of all, wonderful name, especially with the House counterpart. I thought it was inspired. It quite simply is the most consequential event, the passage of the Genius Act, which Senator Hagerty sponsored. The most consequential policy act in crypto since its beginning. Maybe in competition with the election of President Trump himself, just to kick this all off. It was very popular, and not a lot of crypto policy issues are very popular. Why was Genius so popular, and what does that teach us about the digital asset debate going forward?
Well, before I answer your question, I'd just like to say what an honor it is to be back home on campus. Vanderbilt University meant a huge amount to me in my life. I was the first male in my family to graduate from college. This is where I graduated, and this place opened doors for me that I could have never imagined. And staying here for 7 years seemed like a long time, but it was a wonderful opportunity for me and for a kid from a small town not far up the road here to get to leave here and go work for an alum of Vanderbilt, a guy named Bruce Henderson, who founded the firm that I went to work for, was the one that sent me to work for his firm, the Boston Consulting Group, and I wound up working on 5 continents. That wouldn't have happened if I hadn't gone to school here. That opportunity, that door wouldn't have been open. And the friends that I made are still my friends, and it's just such a pleasure to come back and see my classmate Chris Giancarlo here. We worked together in the first Trump administration and have been friends for decades. I don't want to say how long that was. Michael, so good to see you back here. Mike Selig does a great job as our new CFTC chairman and a great mentor, I'm sure Chris has been. And a mentor to me who was a senior when I was a freshman here in undergraduate school, French Hill. Always somebody that I've looked up to. You mentioned I was at the H.W. Bush White House. I was a White House fellow then. But French actually ran the Domestic Policy Council there at that point in time, and frankly had one of the nicest offices I'd ever seen at the White House. But French has been such a leader in the banking industry. And my staff, Matt Benoit, is here with me, a great teammate, and we've been in the trenches together on the Genius Act. But let's get to the Genius Act. You mentioned that it's quite popular. That wasn't always so. And you don't have to go back very far to see the war on digital assets that was underway right here in America. And I think the biggest heartburn that the opposition had was the fact it was decentralized. And I think what they sent, in French, you may agree with this, but I really think that the major opponent would have been Elizabeth Warren in the Senate, Gary Gensler clearly executing over in the over at the SEC. But the decentralized nature of it meant that they couldn't control it. They couldn't choke point it. They couldn't monitor it. They couldn't maintain the type of control that they want over the economy and over everything else. Very deep philosophical divide. You saw that manifest itself when we had the first hearing on stablecoin, and I had to negotiate very heavily to get this prioritized to be the first body of legislation that we worked on in the Senate Banking Committee. And French had to deal with this, for years with Sherrod Brown and the Banking Committee. Nothing happened. And that was the goal. The Banking Committee did nothing except kill things. And the stablecoin legislation was a major piece of legislation, opening up a new body of work and regulatory structure for a new industry in America that we wanted to see thrive here in America. And my deep concern was that were we to continue to allow this to knock along without certainty, it was going to continue to move offshore, and the United States would not be a leader. I wanted to see the dollar dominate international markets. I wanted to see the U.S. dollar be the currency of choice, and I wanted our dollar to be the basis for payments around the world. That was not going to happen if we didn't do something. And getting that legislation before the Banking Committee as the first item was critical, in my view, to get that done. As I said, negotiated hard to do that. And when the day finally came to have our Banking Committee meeting and to debate the bill and what we call mark it up, I guess it was about 11:58. Matt, is that right? The night before, Elizabeth Warren unpacked 84 new amendments to the bill. Now, the text had been out for months. 84 new amendments to the bill, each of them designed to destroy. And it was about a 4-hour session of politely and respectfully back and forth like a tennis match. She'd serve one over and I'd serve it back. And I wouldn't sentence anybody to go watch that, but it was a painful process. But everything that was attempted, got sent right back over. I wasn't sure what the vote was going to be like because Elizabeth Warren is now the ranking member. That means she's the senior Democrat on the Banking Committee. And after all of this back and forth, it finally came to a vote. Of course, all the Republicans stayed with me, but 5 Democrats came over, 5 stayed with her. 5 Democrats joined me, making it the most bipartisan piece of legislation to come out of the Senate Banking Committee in over a decade. Over a decade. I'm feeling pretty good about things. Now it's time to bring it to the floor of the Senate. Well, Elizabeth Warren is a very capable person, and she hit us with everything. I do not know what she said to her colleagues, but every single Democrat came out and voted against the bill, even the ones that co-sponsored it. They voted to tank it. When that happens, typically that's the end of the story. But I went to John Thune and I said, John, give me a week. And floor time in the Senate is one of the most scarce resources in Washington, D.C. But he had enough confidence in me that I might be able to get it done. And I think it took more like 10 days. Is that right, Matt? Or was it 9 days? So a little more than a week it took me to go through the negotiating process. And we finally got it to a point where it was ready to come onto the floor. And we passed it with 68 votes. And that, again, is a strong bipartisan result. That gets to the point where you say it's popular, but it wasn't easy. It wasn't easy at all. And I can remember, and I don't know what was being said, but Elizabeth Warren had one of our Democrat colleagues in the back of the Senate floor, and literally, the law school professor giving to the person, and then that member came down and asked me a question, is it true that? I said, no, this is how it works. And he goes and he votes thumbs up and looks back at her. And I thought, you know what? We may be going off on a new branch here where people really can see the benefit of doing this for our country and the leadership opportunity that it provides for our capital markets. Again, I've always had the view that our capital markets are one of the greatest sources of competitive advantage that we enjoy as a nation. And if we don't maintain that into the digital arena, who's going to take over? Will it be the Europeans, the Chinese? I don't know, but it shouldn't be that way. that innovation needs to happen here. The leadership needs to take place here. It can, and now it is.
And I want to pick up on that point. The idea of dollar dominance, I think, is a crucial through line for stablecoins and maybe crypto more generally. The way I described stablecoins to people who are unfamiliar with the topic is you can download an app on your phone anywhere in the world, and a stablecoin gives you access to U.S. dollars. In the United States, we take that for granted. Most places around the world, that's a life changer. So all you need is an internet connection and a phone, and then something to trade, and you have U.S. dollars in your pocket. That's a huge unlock. That you can send anywhere in the world. This is about creating a new demand base for the U.S. dollar, creating a new demand base for U.S. Treasuries, which back the dollars predominantly. But isn't this also a story about China specifically? You don't see it as much anymore, but last summer and preceding, you saw a lot of stories about the advances they were making in digital yuan. And I recall stories even around I think it was the Summer Olympics in China, where they were forcing U.S. athletes to use digital currency that the Chinese government was issuing.
Download it on your phone. What could go wrong?
Yeah, what could go wrong? So, you're on the National Security Subcommittee at Banking. What are, in terms of the push and pull with China, how should we think about these issues in that light?
Well, I think the China model is a centralized model. And if you think about their social credit scoring mechanisms, their surveillance system that they have in place over their population, it's the most sophisticated surveillance system that exists anywhere in the world. And having a digital currency allows them to completely choke off and control your ability to purchase or consume. So let's say they don't want you leaving the urban Beijing. You won't be able to use your digital currency to buy gasoline to get any further. You certainly can't buy an airplane ticket to go someplace they don't want you to go. It's yet another means of control. And using the financial markets to control is just anathema to Americans, but it was actually happening right here. And after we took the gavel in the Senate Banking Committee, Chairman Scott invited the heads of the large banks to come over and meet with a few of the Republican senators, just with the doors closed, tell us how bad it was. I'm talking about Operation Choke Point 2.0, 3.0, you name it. And we all had anecdotal evidence of what had happened. One of my friends runs the largest private prison company in America, probably the world. He came to me and let me know he'd been debanked and asked for help. I said, how quickly can you get to Tokyo? He actually had to get you think about how capital intensive prisons are. And you're constantly rotating your capital stack as you build more. He had to get on a plane, fly to Tokyo. We got him taken care of, but that's crazy. That's ridiculous that you'd have to do something of that extreme to deal with the fact that you became politically unpopular because a certain senator doesn't like private prisons. Heaven forbid you're in the business manufacturing something that becomes politically unpopular. You can't get banked. There was a clause that was used called reputational risk. Is that the word, French? Yeah, they said reputational risk was one of the factors that could be a reason for debanking somebody. You could drive a Mack truck through that, and that's exactly what we're doing. Well, guess what? Reputational risk is now off the table. That's no longer a criteria. And we're getting back to the basics of banking, not trying to socially engineer what's going on. The Fed, I'm looking forward to what happens there when Kevin Morse comes in. The Fed doesn't have any business trying to determine the implications of climate. Expanding the definition of unemployment to talk about whether it's inclusive unemployment or not. We really need to see them, back to business, and I think you'll see it happen at the Fed. You're seeing it happen from a legislative standpoint, and you're seeing it clearly happen on the regulatory front in our agencies.
So, leaving Genius and moving forward to the current hot policy debate in D.C., we actually can't leave Genius in the rearview mirror because the issue of stablecoins is still alive and kicking as we're talking about how to restructure the regulatory landscape around tokens and token issuers and other sorts of intermediaries and quasi-intermediaries. We have a number of bills which all fall under the label market structure, crypto market structure, digital asset market structure. There's a Senate banking bill There's a Senate agriculture bill. There are House products under the same name, Clarity. Where are we with the negotiations? I know a lot of the proponents have wanted to have something done and on the president's desk by now. Where are we with the negotiations, and how do the next couple of weeks look?
Well, several of us in this room know a great deal about this. Chair Selig right here has been dealing with it on the Senate side. The piece he's concerned about, the ag piece specifically, went through the Senate Ag Committee, was on a completely partisan basis. Every Democrat voted against it. I don't know how it's going to turn out on the Senate Banking Committee side, but it's got to move through both layers, and that's where it is right now. Chairman Hill's done a tremendous job leading the Clarity Act out of the House, and we will be in a position, I hope, to bring all of this together very soon. On the Banking Committee side, I think we're very close, and my expectation is that we get it into committee in this next work period that starts on Monday of next week, so that over the next several weeks we should have this into the Banking Committee. There's several issues still outstanding. I think none of them are insurmountable, and we will get to a point, I believe, by in April, that we'll have it out of the Banking Committee. There's still a lot more work to do.
And what do we risk by not doing anything? I know from my perspective, our company is engaged in a lot of discussions, both in the tech world, but also really on Wall Street. And you get the sense that people are sitting on their hands. They're waiting for there to be some sort of government imprimatur placed on the space, and that legislation, much more than rulemaking or guidance, is going to be that open door. What do we risk, and what do we risk by letting this moment slip?
Just to be very blunt about it, we're going into the midterms, and I think if we get this done in April, we can clearly get this taken care of before the midterms. What you risk is a reversion to the Gary Gensler type of behavior that we saw before, because if we're not able to get this into legislation, and look, if we happen to change the gavel in either the House or Senate, this becomes enormously more difficult. The Democrats in the previous, we would have never gotten this done had we not had both the House and the Senate last year. We would have never gotten the Genius Act done. And if Sherrod Brown, this is my understanding, he's been promised the chairmanship of the Senate Banking Committee if he happens to win in Ohio. If that were to happen, heaven forbid, you can believe that nothing will come out of the Senate Banking Committee that isn't a centralized bank digital currency. And I'm not I'm not hoping for this to happen, but I'm just saying this is a risk that is present. So that's why the timeline is critical, that we get it done. And I think if we get this out of the Senate Banking Committee in April, we certainly can get this done before the midterms. But there is a very real risk that if we don't, we've certainly legislated the stablecoin piece of it, but there's a lot more in the markets that someone we know with a Gensler-like philosophy could come in and start this whole process again of regulation by enforcement action, which creates massive uncertainty, and all that happens to do then is push the innovation offshore. And the industry that we'd hope to see thrive and really dominate here in America, again, is going to start seeping and leaking offshore. I feel good about the dollar's role and our ability there to maintain the strongest payment infrastructure in the world and continue for the dollar to prosper. But the other parts of the ecosystem are going to start to move away.
You get the sense that a metaphorical door is largely remain closed to traditional finance, and that various policymakers and leaders in Washington want it to remain closed. You mentioned Senator Warren. What do you tell your colleagues and other folks in D.C. who want to keep crypto air-gapped from the larger financial system, from the major banks, who seem interested but still their feet aren't entirely warm yet?
Well, you can imagine I'll explain the benefits of moving to the digital option on the dollar, and it'll pretty quickly become obvious where my resistance came. If you think about what happens when we move from a system that was developed in the 70s and 80s that takes sometimes 5 to 10 days to clear a transaction, by moving that onto the blockchain, by using a digital currency to do this, a digital dollar, you're taking away a number of risks. One of them obviously is counterparty risk, right? The person on the other side of your transaction in 5 to 10 days could go bankrupt. That's a real risk. That's called counterparty risk. If it's instantaneous, which is what happens when you move it onto the chain, that counterparty risk is negligible. Currency risk. Think about this, trillions of dollars floating around in the foreign exchange system. Being able to close that transaction almost instantaneously takes a ton of currency risk out. All of the money that's tied up in hedging operations right now, well, somebody's making a profit on that, a little resistance there. But the greatest piece of it is think about all of the dollars that are just tied up waiting to clear. Now that money comes back into the economy. That's a good thing, right? Unless you're earning interest on the float. And you can guess where my resistance came from. So it was like whack-a-mole trying to deal with that, because there's certain participants right now that have a float model, and there was, that was not easy to navigate. But I think I was able to clearly articulate that we're going here anyway. But do we want it to be regulated offshore, or would you like to have some clarity right here? Would you like to find a way to participate in it yourself? And I think what we'll see, and I think a number of the large banks that were participants in the old system are going to move into the new system and be very successful. There's a gap there. They're going to have to change their business model, agreed. But I think the future, the writing is on the wall now with the legislation that's been signed into law. I think we're well on the way.
You definitely get that sense. There's a little trepidation that you may have missed the train, and that you're too far behind on the tech to catch up. I don't see that as a meaningful risk. And the financial industry has gone through technological leaps throughout its history, and so this would just be another instance of that. But you need a law, and I think that this is what the Clarity Act does, I think, admirably, that gives the industry and builders enough play in the joints to go out and innovate. And so when you're looking at a bill like the Clarity Act, how important is that to get that sort of element, that sort of quality to it, where it's essentially building guardrails and deciding swim lanes for various assets and different functions, but gives people in the industry and the private sector plenty of room to play with.
Yeah, that sandbox, I think, is very important to innovation. And you've got Chair Selig here. You'll have Chair Atkins in a few minutes. I'm comfortable with them leading these agencies that will be able to navigate in that environment. but without them, we could get a very different result. That's why it's important for the House and the Senate to come together and put some legislation in place to remove the variability, I guess is what I'm trying to say, that could exist. And again, that means more certainty for the marketplace, more willingness to invest here in America, more willingness to keep your innovative assets here. And the last thing I want to hear is another developer move into Portugal or something like this, which I was hearing this a lot. We want that to happen here.
So turning to the agencies, right now, if market structure doesn't get done, we have, let's say, pro-innovation leadership at the SEC and the CFTC and at Treasury. Elections matter. Your agency leadership will change with time, and it's just with new legislation, their work gets embedded in a lot firmer structure, a lot stronger foundation than if they're going with the laws currently on the books. But still, they're in a position where they don't want to get ahead of legislation, but at the same time, they can't just sit around and do nothing. I know the SEC, as Chair Atkins will be talking about, has put forward guidance. Chair Selig has done a remarkable amount of work, given the few months he's had the office. Part of the banking committee's job is to oversee the agency. From as far as we could tell, other than the agencies talking to one side of the aisle under the last administration, under the last Congress, and not the other in terms of what they were working on, there didn't seem to be a lot of collaboration to be moving forward in a productive, to be charting a new path with digital assets. How has the dynamic changed with the agencies now? What, from your vantage point, can you see about what the agencies have been doing? How much collaboration has been there? And how do you see the rest of the year playing out?
Well, I could spend a long time here criticizing the prior agencies. It seemed that there was a regulatory competition among these agencies to prove that they could outregulate their European counterparts. And if Europe is your goal, if Europe is your model, well, let me just put it in very blunt terms. their economy, since they formed the European Union, and when they did, they were roughly the same size. That economy was roughly the same size as America when the EU was formed. That economy has grown in total between 7 and 8%. Over the decades, the GDP has grown between 7 and 8%. We have grown more than 10x that here in America. Ask any European leader why, they'll give you two words: the European Commission. They've regulated themselves into obscurity. And we've got, I'm just thinking no further than Michael Barr and what he was trying to achieve at the last Fed with his Basel implementation rules. He was going to make America even less competitive than Europe because he could flex his regulatory muscles, I think. And I'm not a psychologist, but why would they want to do that? That's all changing right now. We've got different person in that role right now, and I think we're moving in a much better direction where we, again, look at making our banks certainly strong and stable, but also competitive. And that's the same sort of philosophy that we've got leaders at the CFTC and the SEC and the Treasury thinking today. We want to make our markets strong, and they've got to be strong to be competitive. But we need to keep competitiveness at the forefront. We need to taper regulations so that they make sense. If you look at our banking situation here in America, we lost a lot of banks, no question about that. We've seen the number of banks, almost halved in the past decade or so. But we still have a much more robust system. You look at Canada, where they have 6 banks up there. And you think about Europe, and if you think about where this would all inevitably go, there would just be several large banks that, favorite senators could call up and choke, and that's not where we want to land at all. If you think about the way credit gets distributed here in America, the way communities grow, there's a very critical role for community and regional bankers, and I think you're going to see a system continue to evolve where we are supporting that. Again, this legislation helps us move into a new arena, and we're not talking strictly about banks here. Non-banks are involved as well, but all of it, I think the overarching objective here among all of us that are in this room that have the responsibilities is to try to maintain more participation, more market leadership here in America, and more innovation that keeps us at the cutting edge, the competitive edge of the world.
Well, speaking from an industry insider's perspective, the temperature in the room is now completely different over the last 18 months. America is where the opportunity is and where you want to be doing business, and we just need to take this opportunity to ensure that persists. You can decline to answer this. Is market structure done if the Federal Reserve rate is less than 1%? For the last 12 months, if the market and stablecoin yield was just off the table because there wasn't any yield, do we have a market structure?
It's not just yield. That's the issue. There are other issues. I tell you one that has got a lot of politicization behind it. Has to do with meme coins and the participation of members of the administration or their families in this, which I think is practically irrelevant, but it is a political hot potato, and we've got members of the committee that want to make a big deal out of this, so they could derail it, just over matters like that. So there are, certainly issues with respect to the DeFi environment, how you regulate participants there. Do you want to basically treat people that are writing code as if they're intermediaries and regulate them that way? These are not simple issues, but there's a lot of good work that's gone into addressing them. But I think there's been a focus, because it's easier to explain, there's been a focus on yield. But I think there are other elements of this that are all still being negotiated, and I wouldn't want to minimize those areas either.
Well, we can finish up with this. I recall back in 2024, Nashville, the Bitcoin conference, and I worked for the Trump administration for 4 years, but 2 in the White House. And I recall the look on the president's face when he says he's going to fire Gary Gensler.
You repeated it.
And the room, there's this one
smart.
little look where he sort of looks at the crowd. He's like, okay, I just tapped into something here. And it was that look. And I think you are fairly credited with orange pilling the president and getting, I think, a lot, like the campaign and other important people around more focused on the issue. His support of all of this of Genius Act and of the other measures absolutely critical. I don't see it wavering anytime soon. I see, the criticisms will come, but like talk about as we finish up here, just how important it is to have a commander-in-chief who's dedicated to seeing innovation in this space being bolstered.
Well, he and I have had extensive discussions, and I might share my own metamorphosis here. I've not spent a lot of time thinking about digital assets, digital currency, until 2018. I'm serving as U.S. Ambassador to Japan. I am literally, and if you think about Japan, we have more military stations in Japan. We have a huge intel operation because we're dealing with North Korea, China, and Russia every day. It's a rough neighborhood out there. And at the time, you've got my button bigger than your conversation going on. Kim Jong-un is launching intercontinental ballistic missiles over Japan. And I'm literally on the phone trying to get foreign ministers to not allow North Korean guest workers to work in their country to block a $12 to $17 billion revenue stream. You've got our Secretary of State, calling folks to not buy North Korean coal, ship-to-ship transfers. We might be blocking a $3 or $5 million revenue item for the North Koreans by blocking their ship-to-ship transfers of coal. These are the numbers we're dealing with because we're trying to choke off their ability to threaten the world with nuclear weapons. And then I walk into my office, and there it is above the fold, the coin check heist. $500 million stolen in one night. And the CEO's picture's there on the front. It looks like he's about 23 years old. And I call my team in, and I said, "Are you guys on this?" They said, "Well, sir, it's embarrassing to the Japanese. They won't share," I'm using the wrong word, "they won't share the malware with us." It took me an hour to get the malware. I had it back to the States. State actor definitely did it. We couldn't pin it for sure. I always thought it was Lazarus. But my view was immediately, and I was going back to the States the next week, I sat down with Stephen Mnuchin in his office. What are we going to do about this? All I was looking at was, boy, the fraud, the crime, somehow this happened. And then something else started to happen. The people involved in it started getting caught because you can't get off the ramp without going into the legitimate system. And what I realized was I needed to understand this technology much better. We've been dealing with illicit finance since biblical times. The question is, and what I found out too is the CoinCheck heist. CoinCheck was one of 19 wallet shops that were, quote, in the application stage. They'd not been approved to even be a wallet shop. But Japan they wanted to be a competitor here. At that point, Tokyo and Seoul were the two largest markets for cryptocurrency. They were trying to be competitive, but they weren't being very diligent in regulations. I got all 19 of those shut down. And the thing is, regulate it properly, but allow the innovation to occur. And when I started thinking about the potential of the blockchain itself, self-reinforcing contracts, I mean, think about the brain damage that goes on every time a deal gets retraded at the end. If you had, or think about people from different cultures, the confidence that the contract will be executed would be wonderful for the economy. And then the speed and all of the benefits I just mentioned with stable coins that you get by being able to do things on an instantaneous basis. I could see the benefits of it far outweighing the concerns that I had. And the concerns, we need to address them, but we need to address them in a responsible way. And that's why you've got the people sitting right here at this table right now and me. That's our aim to get it done.
Well, please join me in thanking the Senator for coming all the way here.